Well, good evening, all. Ira Epstein with your metal market wrap-up, and this wrap-up is for the evening of Thursday, January 4th, 2024. I always want to say 2023, but we're into the new year already. And the time right now, 6:40 p.m. Central Time. So another chop day. And what I learned, and I made some trades I made recommendations for my clients to follow. They weren't right this month. I started off terrible, but it's only the first 3 days. It'll settle in. What's going on? The markets don't know what to do. They're being thrown around. Give you an example. Crude oil, one of those markets that I'm basically not friendly on, and yet the market rallies up because the market was petrified yesterday that Israel was somehow involved in the bombing of the area in Iran, where 100 and some odd people were killed, another 200 definitely injured, and Iran's pointing fingers right away at Israel, maybe the U.S., and as it turns out, it was the Islamic State that took all the credit for it. Well, that settled the market back down and you slipped away. So now it's going to be, is it going to be a demand cycle? What's going to make the market move? You know, the one thing that you have to be scared of in the stock markets, even though this is metals, I'll come back to that in a minute, is that nobody is figuring that something's going to go wrong, that the Fed's going to get it right, and that inflation's just going to keep falling. What if that doesn't work? You got to think about it. Number 3 on my hit parade. You've had 3 down days in the stock market. If you go back, you've not started off a year with 4 downs. Got that? 4 in a row since 1978. What does that mean? Those are things you always look at. Could this be where the market gets itself into a stumbling block in the near term? No way to know. What I do know is that we've seen now the first trifecta coming out on the jobs, and they're all strong. The JOLTS report, more jobs offered. If you throw the revisionment in, no, slightly down, but 8.8 is a big number of jobs still being out there. If we looked at the ADP number today, up 30,000 more than the market thought. The Challenger Gray number for corporate cuts, a surprise, about a 30,000 cut. The market wasn't expecting that. And tomorrow we get the all-important U.S. jobs report, and they are expecting 170,000 new jobs. What will that do? What's the employment rate going to be? Remember, one of the things the Fed wants you to see is that it goes up towards 4.1%. We will see if that comes into play or not. When we take a look then at what's going on in the metal markets, the one that had the strongest seasonal fell apart over the past 3 days, the platinum market. The others are trying to get their footing right now. The dollar has stalled out. I said it yesterday. I thought we could stall near the 102 level, and we're there. That's about what we're doing. But none of this means much till we get through that report. At the end of the month, we have the all-important FOMC meeting again. And of course, after this week, we start into the regular economic data and a lot of CPI and PPI readings. Got to pay attention to them to see where they're going to come in. So let's take a look and just see what this all offers. But before I do so, I want to remind you, you got 24 hours to my sale ends. So tomorrow, the sale for my New Year's sale to get 40% off my research off the board. New subscribers, monthlies, upgrades. If you're a current subscriber of mine that has a 1-year subscription, no, you can't cancel it to buy one of these. I won't honor that. But you can buy a brand new one of these. So if you have the morning subscriber video, you can easily say, hey, maybe I'll go to the full research. I mean, there's different variables you can do, but I'm not going to let you take one price and then you end up lower for it. I give plenty to you in the way of discounts and courses and the like and so on. How do you get all this? IraEpstein.com, research, you move your cursor there. And remember, what we're talking about is I put out, at 5:15 in the morning, I'm typically recording my futures videos, specific, buy here, sell there, here's the stop, here's the profit objective, the reasons why, with charts showing you what I'm seeing, a mixture of daily and weekly. And then at 9 in the morning, I start recording the Spider ETF one. I like to do that 30 minutes after the market opens. The reason, I want the morning data to be in the market. And generally, we're through with U.S. economic data at 9. So that's when that part comes in. And then, of course, I'm going to be doing, and I told you, we'll have a webinar coming up in January. I intend on doing special reports. I have to get back to finishing my charting course. I lost a full week. We haven't done anything. We've had such a big success with the sale that it's just taken all our time, but that's coming to an end now, and I thank you all. All right. So when we look at gold, everything on a chart is about filters. Think of it this way. You're looking for reasons not to trade. I know that sounds crazy to people, but it's true. Anybody can say, let's buy or sell. Why not wake up in the morning? I rolled out of bed on the left side. That's my sell day. Let's go sell. You think that doesn't work? It may work as well as other things. You never know. But when I look at the market and you're over that, that means there's a bias in the market. As long as it stays over the 18-week average of closes, I have a bullish bias, and that's one of the filters I look at. I then come on and I can look at a chart and say, okay, what do we have? I got lucky. I correctly predicted that this peak was going to happen. It was right over a Bollinger Band. I didn't think it would hold up. And when we came down here, what I looked for, I said, well, if that ends up, because you had bounced so much, as the top and the bottom, maybe a 50% correction is where the market's going to end up as it tries to figure out what to do next. We know we've got the Ukraine war. You don't hear word about that anymore. You really don't in America. You're not hearing at this point too much about Israel. It's no longer the front page. It's not Fox News night and day or CNN night and day. That isn't going on either. What's going to get your attention now is going to be the fact of the dysfunction in Congress, the president determined to keep this border open, which I'll never understand what he's doing, the impeachment of the Homeland Security chief that runs the border because he hasn't done his job, according to the Republicans. And what about all this leading right up into what? The budget. Where's America going to get the money to pay for everything? So while the president says, yeah, I can do things on the border, give me money. No. Once fooled is the fault of the Republicans. Twice fooled, they won't be. They're going to say, we'll give you money, not for what you want to do. Mass just let everybody in the door and, yeah, we'll bring out some people and we'll run them through the system. Now, there's got to be controls on the border. America is built on immigration. Don't you kid yourself. My parents, just about every person here other than Indians, were immigrants in some way or the other. But controlled immigration, tax paying for that. We want the Latins that want to work. We want the Mexican people. We want the South Americans that want to work. It builds America. It's great for our labor force if they contribute to it. So you're going to see, and I'm not getting off gold. I'm pointing to you something, the battle that's going to happen. You're going to see the first failure. I predict you got a January 10th date. Nothing will be met by then. Then you have a February date, and that is where things have to get done. I predict the Republicans don't give too many inches. They've got too much to gain by not doing it. So therefore, I look at this point, I hope I'm wrong, for a shutdown at parts of the government because I think the Democrats are caught in the wrong area. I don't understand this whole thing on the border, but I know you're going to explain it. I've asked over and over, write me about it, explain it. Do you know how many people have written? And we have thousands of viewers. Nobody. Because you don't get it yourself. None of us get it. It's confusing. Bus upon bus hitting Chicago, dropping them in suburbs. Now the suburbs are fining the bus companies. There's nowhere to put these people. It's 25, 30 degrees. It's winter. They arrive here with a blanket around them and they drop them off at a bus stop. Does that sound to you like something that's well planned? Okay. So we look right here. You can see what's going on, the sideways action. The pattern is not trending. The swing line is the brown line. It's made up of 5 rules. You look to the bar in front of it. It could be a 10-minute bar chart, a 5, a 1-hour chart, a daily chart, a weekly. It doesn't matter. The rules are the same. Do you have a higher high, a lower low, an inside bar, an outside bar up or down? It's that simple. And then I give you the rules in the course as to how you draw it. Why? because the market's always looking to see are you trending, and then if you can determine a trend, if you have one, how do you filter it to decide should it keep going or not? This is not a trend. This is a market that's doing this, just what I'm doing with my finger. Where have we pulled back to? The bigger story. Markets like to fight at the 18-day average of closes. That's very important because on a daily chart, the bias is still up. So if you were to get under 2038.30 and close under that number especially, you'd have a pattern of lower highs, lower lows, and you'd have your first bearish pattern in the market. Conversely, you've had a nice rally, you've pulled back, and now the market's got to prove to be bullish that it can hold here, stay above that 18-day average, and build on that if it wants to go higher. In terms of the Bollinger Band, for those of you that have taken the Bollinger Band course, come on, you went right to the top and you know what I teach you. The odds are the first challenge of a Bollinger Band is where you start having a problem. You hit it back here and you did carry further, and then the people got killed on it. You don't, I teach at least, doesn't mean that you shouldn't. I don't teach to buy Bollinger Bands. I teach to liquidate positions against them from long side, not to be a hero in going short against it. Momentum-wise, you had gotten overbought, and now you've pulled back and you're into the sideways action. So going into the jobs report in the morning, I don't see anything I can hang my hat on in the gold market. The gold-silver ratio has been a great bellwether. Is silver stronger than gold, or conversely, silver going to be stronger than it? When I have it in gold, it means that you need more ounces, the numbers go up, of silver to get 1 ounce of gold. That's bearish the silver market. And you tell me the silver looks pretty darn in a downtrend, unlike gold, under all the key moving averages, but oversold. Came into the support of this area that it was at before. There's no bargain here in going short silver. None at all. I don't see a reason to go long, but I see plenty of reasons to say, I don't want to play on the short side. In the copper market, you're trying to establish a new downtrend, but the real key isn't that. This 200-day average is the key in this market. The market is fighting a battle between that and the 18-day average, looking to see can it hold itself together and mount something going up. It had ideas of hope from China, who was putting more money into the urban sections for the grid and some infrastructure, some housing, but China won't be ready to do their whole program till March. So the idea of it was there, but everything was running up, if you'll remember, into the mid-December timeframe. And as we got to the end of the year, like so many other markets, everything started selling off, and that's what it's been across the board. And here's a market that I admit caught me. I thought that you'd keep the embedded reading. The seasonals were up, so I looked for a pullback in this area to hold. It just plain didn't hold. It happens. Okay. And the market has now got a pattern where you have a higher high, and with the break low you just made today, you took out this low. So the market now's got a higher high and lower low, and it's got a battle to fight from 975, the 200-day average, right up at 976.70. Momentum down, bias down, not trending. But you just took this market down hard from the 1030 level all the way into the 965 level. That's a pretty big break, $65. When we step over together to the dollar index, I told you yesterday, and I'll repeat, I think you're in a battle right here for what the next play is going to be. I think that all you had so far was a bear market rally, lost its bearish momentum, went back to the line in the sand, the 18-day average, to fight a battle. The battle will help to be decided tomorrow when we finally get the jobs report. So you put that together with this, and it's going to be an exciting morning. Make it exciting for yourself. Take advantage of our January sale. This ends tomorrow. Move your cursor up to the top right there. That's one way to get there. You'll see an icon. It'll take you to the website. Otherwise, iraepstein.com, word research. You'll see the prices. When you choose your yearly, go in, put in your cardinal, you will get the 40% discount off the retail price. I'm Ira. You have a great evening. I'll catch you first thing in the morning.